This channel is for educational purposes only. Make sure you do your own due diligence before making any investments. And there is inherent risk in trading, so it's speculative. Just make sure you keep that in mind.
Hi, this is Joe Rabil with Invest Like a Pro. So I wanted to talk today about what I think is the most important area or spot to be a buyer in the market. And it is a reversal pattern, but it can be used in conjunction with a uptrend as a pullback trade as well. Once you understand how to use two time frames together, I think this can really it goes to kind of the core of your understanding of use of multiple time frames. And I spend a lot of time talking about the indicators, but you need to know how to use this just using price. And so I want to make sure that I cover this. It's been a little while since I've gone through this, and I think it's a great refresher for someone who might think they already know how to trade in multiple time frames. I think you're going to find this very useful because it's going to get you thinking the correct way. So we're going to get into this example here, and what I've done is I've drawn out on this chart. I wanted to just show kind of in graphic form what I'm looking for. So on the left, we start and we've got a stock that's in a downtrend. The blue line is showing the downtrend making lower highs and lower lows. We make some type of a bottom and then rally up. And if you're drawing your trend lines in place on a regular basis, you're going to see a break of the downtrend line. And that qualifies as the one in a change in trend. And then we're looking for a test of the low. That's the 2, right? So this pullback can go all the way down and test the low here, or it could overrun a little bit, or it can make a higher low. Like in a lot of cases, it'll just hit, a 50% retracement or a 612, something like that. It's at this point that I think we need to understand we've had a break of the trend line, and now we're testing the low. So we've essentially made 2 important steps in a change in trend. If we come up through this vertical or this horizontal line up here, this prior peak, then that would confirm we have a step 3 in the change in trend. And as I said, I use that as presumptive evidence that the trend is changing. A confirmed trend would be another higher low made and another higher high. So you always need a series. You need 2 higher highs and 2 higher lows. But the way I trade and the way I talk about this in my book, because I'm looking at multiple time frames, I think I have an edge. And I think what I can do is say, break the trend line and look for this higher low to develop. And if that happens, there's a pretty high probability that we're going to start seeing at least a test of this prior peak and maybe even a reversal of the trend. And so I've drawn an arrow over here because this I want you to think about as kind of like the inset of this bottoming formation, because we have this decline, and that decline would look like this on a smaller time frame. So let's just say that we're looking at a weekly chart and you're making lower highs and lower lows, and then you break the trend line and pull back. Well, on a weekly chart, it just looks like a simple pullback. But on a daily chart, it's going to look like lower highs and lower lows. And then we're going to break the trend line and come back and test the same way we did on the weekly chart. You're going to do it again. So what I'm trying to actually find here is a 1, 2, 3 in 2 consecutive time frames. And the reality is that if you think about this in terms of the stages in a trend. So if let's just say we're starting here, and this would be a basing stage or stage 1, and then we continue to climb higher, and this is stage 2, and then we make a topping pattern, that's stage 3, and then we go through a declining phase, and that's stage 4. And then we start the process all over again, and then we start another basing stage here. So if we think about it in these terms, what we're trying to find is a stage 2 in 2 consecutive time frames. Because once we take out this line here and we start to the upside, we have a stage 2 trend in place, stage 2 uptrend. So stage 1 is base, Stage 2 is uptrend, stage 3 is a topping pattern, and then stage 4 is decline. And then we start that process all over again. And the market does this not only in a single time frame, but it does it in all time frames. So you constantly should be on the lookout for where you are in each time frame. Are you in stage 1, stage 2, stage 3, stage 4? What I'm trying to find constantly is a stage 2 match. I want a stage 2 on the higher time frame, and then I'm looking for the stage 2 on the lower time frame. And if we can combine those two things, our timing is going to be impeccable. And you're going to start getting in trades where you instantly see profits. And so that's kind of the goal here. That's what we're trying to accomplish. So let's go ahead and look at an example of this on a real stock. And so if we look at what took place, this is Liquidity Services, kind of a small cap name, but it made a huge move. It was a stock that I had been looking at, especially in here and in here. But I want to show you how the bottoming process took place. So if you saw this, we're doing the same thing I did in the graphic formation earlier. We have lower highs and lower lows on the weekly chart. And then we make a move and we break the downtrend line, and then we pull back and test. So now we're at a 2 at this point. Now, I use the moving averages to make this a lot easier, because you can see this is the first pullback to the 18 after it's rising. So it comes in really handy using the moving averages. But what I want you to be able to do is strip the moving averages off the chart and look at the price action by itself. Make sure you can see this price structure trending down and then breaking the trend line, and then we'll get to this point here. Now, I've circled this area because I want you to see on the daily chart what that actually looks like, because now we're making a pattern that is essentially trending lower. And the way I think you want to look at this is you take this trend line, you draw a break of the downtrend line, and now you've done the 1, breaking the downtrend line. Now you come down and test this low, and that's 2, and 3 would be coming up through here. Now it ended up gapping up through this point, but if we follow through, we can see we had another move to the downside here. And if you were drawing your trend lines in place, you had another move to the upside, that's 1, and then a pullback 2, and then the move back up would have been 3. So it happened 2 consecutive times. The first time was a reversal of the trend, and the second time was a pullback trade to the 18 and the 40, which were rising. So I would consider this to be a pullback trade and this to be a reversal trade. And then we actually had another pullback trade I don't really show on this daily chart. But the key here, and I hope you're understanding what I'm seeing, I like using the moving averages because as I've said, when you break the downtrend line and then you move back and test the low, in many cases you go into the zone between the 18 and the 40, and then you come back and test the low. And that is the sell signal that is failing because you're going in the zone, and then if you come out of the zone, it's supposed to come down and break down. And in this case, all it does is test the low and turn to the upside. So if you understand price, then you can overlay the moving averages, and I think it'll make a lot more sense to you. So I just wanted to make sure I covered this in detail because you want to be able to look at price action alone, and you should be, one thing that I would suggest that you do if you want to get really good at this is to make sure that you go through the Dow Jones Industrial Average individual stocks, 30 stocks, have a weekly on the left and a daily on the right. Strip everything off the chart but price, only the price action, just the candles. And see if you can find a 1, 2, 3 followed by a 1, 2, 3 on the 2 consecutive time frames in any of those charts. There might only be a couple that have it. And maybe just go back like a year or 2 on the weekly and see if you can find a reversal trade that's taking place and a pullback trade that meet the criteria that I'm describing here. This is the type of stuff that you want to do because when you start seeing this stuff in real time, especially if you trade on shorter term time frames, it happens so quickly that you're not going to recognize it. You need to go back and study the film. This is what the pro quarterbacks do. They go back and study film. This is how they see it, and the game slows down for them. You have to do the same thing in the market. If you think this is any easier than being a professional football player, you're crazy. Making money in the market is very difficult. And I'm trying to show you where that pinpoint specific entry points on both the reversal trade and a pullback trade. So make any comments or questions that you might have below, and we'll see you next time.